Right, good afternoon everybody. So then last week we did part of LKS 38. We had the balance part on that date and what else? What did you cover last week? You didn't come. Yes, LKS number 2 and one more I think. LKS 10. 10 events after reporting date we discussed. Yes, right? So those are the areas that we discuss. Actually, you don't want to refer number wise, but mainly we discuss some accounting treatments relating to inventories, and it is anyway easy one. And some accounting entries or adjustments, or we can say treatments relating to events happening after reporting date. Accordingly, if you can remember, we basically classified all those events into two as adjusting events and non-adjusting events, and we had kind of deep discussion on adjusting and non-adjusting events. For the examination purpose, I don't expect you to write or define what is adjusting and non-adjusting. At least we should be able to discuss or understand if any scenario is given. So you should be able to understand whether it is adjusting or non-adjusting. If it is adjusting, how to do the adjustment. Right? So that's the expectation for the examination. And also we discussed something about LKS number 38, covering different intangibles. You can remember we discussed about external generated goodwill, training and development cost, research and development cost, government license, patent rights, and advertising cost. Right? So we discussed whether we can recognize those as intangibles. Anyway, if you can recall the way up to this level, we started with, as I remember, discussion on revenue, accounting framework. We discussed something about framework, and we discussed about assets, liability, income, expenditure, and equity. And thereafter we discussed something about revenue, and we discussed different types of revenue and how to recognize those revenue items. And another one, if you can remember, we discussed after revenue, LK 16 we discussed how to recognize property, plant and equipments into books of accounts. Number wise not important, but content wise you understand we are discussing main lines in our financial statements. Right? So one line PPE, property, plant and equipment, already we have covered. Another line revenue, already we have covered. And intangibles we have covered. Another important element is inventory under non-current assets, already we have covered. And some events happening after reporting period, because mostly people can do different misleading work in their financial statements, so we can say actually a kind of different kind of reporting using events happening after reporting date. So therefore we discussed that one. And also mostly people do different creative work in accounting by using selection of accounting policies and estimates. So therefore today we are going to discuss something about IAS 8. Actually let's say now very simple example. If I need to overstate my profit this year, what we can do is we can reduce the depreciation rate, right? So it is not allowed, or we can discuss it later. Anyway, one alternative as accountant, you can think, okay, now this year I'll depreciate my let's say one of the machine at the rate of 5%. But next year, when comes next year, you feel like no, I need to hide my profits. So therefore what I can do, I change my estimate next year, and I say no, I can use this asset only for let's say 5 years, therefore I am going to depreciate it at 20% rate. As a result of that, what happens? Your depreciation will be increased and your profit comes down. Look, based on the selection of the method that you use or the depreciation rate, you can change your profit. When you show comparative, sometimes you will see that last time you have big profit, this time it's less profit. That means you're hiding something. So something like that. Also sometimes, let's say when you decide whether you need to capitalize something or whether you need to add it to part of cost, it's kind of decision you need to take. And also classification of items, especially like whether you need to classify something into cost of sales or whether you need to classify something under other expense. Based on that, you can do kind of misinterpretation or misleading work in your financial statements. So therefore it's important to discuss about accounting policies or methods, as well as different types of estimates we use in accounting. Also sometimes errors happening in our accounting. So how to treat these kind of problems? Let's say a very simple example like this. Let's say when you do a depreciation calculation, you have done a mistake, let's say 2 years back. But when you come into the end of the asset, you realize that you have done a mistake 2 years back. But you discover it in the current year. Now what is the treatment you need to do? Whether you just delete it from books of accounts, or you erase it, or you do reversal entries, or what kind of accounting treatment should be done. So those are the things we are going to discuss today under LKS number 8. Basically 3 things: accounting estimates, policies, etc. And also sometimes you will feel, if you can remember, already you have learned, I think with Professor Jayamaha, provision for doubtful debts. I think you learn, no? And bad debts, etc. Right? So you decide to write off something as bad. Let's say now this year there is a debtor of 1 million. He will not pay money. So therefore you decide to write off it as bad. Next year what happens? So then he will pay back the money. Now what you have to do? You need to reverse it for the last year, because it's kind of judgment again. Let's say now there is debtor called X. Board of management decide now X will not pay money. As a result of that, we decided to write off it as bad this year. When comes next year, our estimate was totally wrong. He paid money. Sometime, let's say he died, but his wife paid money. Maybe possible. So then we are collecting money in the second year, next year. Then what happens as a result of that? Next year you are getting something, and last year you decrease your profit. Now what to do for this kind of scenario? Even over provision or under provision. What you do for under provision or over provision? You just adjust it to the current year. But over provision or under provision came because of the last year. The last year provision is not accurate. Right? So then as a result of all these, what you can understand, based on the selection of the method or the estimate you make in accounts, you can do different creative work in your financial statements. Now therefore there is separate standard with a set of guidelines to avoid those problems. Still we can do, but this will minimize the creative accounting in financial statements. But there are certain guidelines. Actually this is not a big one. Scope wise it's very small, but application wise this is really difficult. Right? Scope wise it has only 3 main elements. Like if you can remember last week we did one events after reporting period, we had only 2 branches, adjusting, non-adjusting. You have to understand what is adjusting and non-adjusting. It's very easy work. Again we did LKS number 2, only few principles we had. Here also we have only 3. We are talking about errors, change in accounting estimates, and accounting policies. Only 3 terms we are going to discuss. Then scope wise also it's not a big one, but this will affect everywhere. If you can remember when we discussed LKS 16, I told, can you remember? We met review of useful lifetime. If useful lifetime is changed, it basically based on management judgment. Let's say now I buy this computer today for 50,000 and I assume that I can use this for another 5 years. After 1 year's time, what I can do? I have to review this useful lifetime of the asset. Then it should be 4 years more. But I feel like no, it's not 4 years, it should be another 8 years because of the maintenance policy I had. So I feel like it's not 5 years. Now it's management judgment. Based on that, what I do? I depreciate this asset over next 5 years. Thank you. Right? So look what has happened as a result of that. Next several years your depreciation will comes down, but the first year of this asset depreciation is very high. So look, it depends on the management judgment again. So therefore what are the guidance on this? And also I am going to discuss today LKS 37, this one. LKS 37 relating to provisions, contingent asset and contingent liabilities, because now there are some uncertain liabilities. Liabilities anyway certain, present obligation there should be. So then we'll discuss what are the uncertain assets. So we call it sometimes contingent asset, contingent liabilities, and provisions relating to LKS number 37. I think now after this 2, I am planning to stop the scope. I have another 1 week. This is 11th week now. 11th, 12th. I have 2 weeks more, I think. This is my 6th lecture as I remember, right? Maybe 6th one, my 6th one. Professor Jayamaha did 5 as I remember, 5 or 6. I can't remember actually now, number of weeks. Anyway, I'll check it. Don't worry, but I have minimum of 1 or maybe 2 sessions more. So therefore, I hope to discuss kind of revision for the scope that we covered, not only for my sections, to cover Jayamhasa's sections as well. So therefore, there are 2 weeks, so then we can ready for the examination straight away. When is exam? 16th. Starting 16th. Exactly, yeah, close to 1 month, no, less than 1 month, no. So it will be beneficial for students because I'll discuss some past paper questions and some model questions, also a model paper. So then we can actually target the exam. Mostly I have noticed now people do not participate. Now online again today around 6. Online 6, class 5 means all together 11, right? 11 means out of around 70, more than 70 now, right? Out of 70, 11 means it's very poor percentage. Participation wise, I don't know whether still, I informed them to send you the log report also, I don't know whether you received it, whether you have studied this. But anyway, now let's start the discussion about LKS number 8. We're going to discuss 3 terms, I told you, account errors, accounting policies, change in account estimates and errors. Only 3 terms. You don't want to take or memorize these definitions, but just understand what is accounting policy, what is accounting estimate or error. The difficulty will come because mostly people do not understand how to differentiate accounting policies from estimates. Now, if you can tell me a few examples for accounting policies. Any example for any accounting policy that you use as accountants? Depreciation, that's the first answer usually I get from any class, right? Depreciation policy, okay, fine. I didn't say whether it is accounting policy or not, but anyway, it's kind of example. Going concern is accounting policy, or it's kind of concept. Any accounting policy? You are working as accountant. Is it? What's the company you said? Financial accountant. Accountant. Accountant means there are 2, management or financial. Financial. That means you are doing all books of accounts there. You are handling all books of accounts. Very good. Then what are the accounting policies you use in practice? What are the accounting policies? Writing of bad debts. Yes. Okay. One example. What else? I didn't say whether I didn't accept these. Huh? Those are kind of pool of answers we have. What else? Amortization. Policy or what? Already we have discussed lot. Okay, fine. Accounting policy. Okay, then tell me accounting estimates you make. What are the types of estimate you make in your work? No estimates you make. Why not? You make a lot of estimates? No estimates, all are actual figures, is it? Okay, budget also part of estimate, but we don't incorporate into financial accounting, it's part of management accounting. Provisions, when you make provision, so the term is still questionable because it comes with LKS 37, I'll come to that point later. Anyway, like we may have learned provision for expenses, that means accrual expenses. So it's kind of provision. Let's say now I need to finalize my accounts by 31st March of this year, or anyway, any year, but I have not received the electricity bill. Then what you have to do? Based on first 11 months, you have to assess it. And what you have to do? Make a provision for possible accrual expense, electricity. Right? So that's kind of estimate. Any error can be happen. Useful lifetime estimate of assets. Yeah, it's also kind of estimate. We have a lot, I'll show you, right? But remember, mostly still you didn't say any example for accounting policy, right? So all are accounting estimates, right? That's why I ask. Mostly people say all examples coming under accounting estimates. Can you remember one accounting policy we learned last week? That's FIFO and WAC. Whether you go with FIFO or whether you go with WAC, can you remember? What is that? It's accounting policy choice. That's good example. Within our scope, because we have learned only that, as I remember with my discussion. So even though I can take other examples, but you can't understand because we have not learned. Or sometimes you can say like this: you have learned cash basis accounting and accrual basis accounting. Whether you do cash basis accounting or accrual basis accounting, that's it. It's kind of accounting policy. Whether you go in that or the other, it's kind of it's selection there. Not management estimate. Those are there. We have to select one. Like let's say in IS 16 we learn another one. We go with cost model and revaluation model. Can you remember that too? Initially we recognize assets at cost or carry out at cost minus depreciation carrying value. Or you start with cost with the purchase price and you revalue it to market value and go with revalued amount. There are two tracks. What is that? Let's say you decide, okay, I'll recognize initially at cost. I don't revalue. I don't have enough sufficient funds or whatever it is. Therefore, I go with the cost model. Revaluation is not compulsory for small businesses, SMEs. So therefore, it's kind of choice you decide. But anyway, it should be revalued if there are certain conditions, but there are some conditions also. But anyway, it doesn't matter. So those are examples for accounting policies, right? But let's see what the standard says about these. Now, what is this? I didn't see the conversation. Sorry. I didn't see this. Sorry about this thing. What they say? Yes. I think the online people, you have told about these examples for accounting estimates or policies. Is it? Provision for bad debts will be example for accounting estimate, and also there is another one. What is it? Yes, good example. Stock valuation, definitely example. I didn't see actually previously, very sorry about it. Stock valuation is one example for accounting policy. I told you, it's good one, right? And what else we have? People said I didn't see this. Valuation of inventory, very good. Yes. Yeah, that's it. Contingent liability is part of, actually this is estimate. Contingent liabilities, bad debts, everything estimates. Right, now let's see what we can do, and mostly I can show you even accountants sometimes do not understand some areas in these errors and change in accounting policies. We'll see whether we do a lot of cases today, like small scenarios, and we'll discuss and hope that you will give kind of creative answers. Like last week somebody did, yes, right? We'll see. Right, now this is anyway, you can read later. First you have to understand terms. What is accounting policy? What is change in accounting estimate? And what is error, right? Anyway, errors I think you all are very familiar. No? Usually you do errors, right? If you don't familiar, you can see how errors can be happen in the exam. Right, then what is accounting principle? Sorry, policies first. Look now, it says, no need to memorize this definition, just to understand only. Even though you memorize this definition, when it comes to practice, you can't understand whether it is accounting policy or estimate. I'll show you some examples later. Are specific principles, bases, conventions, rules, and practices applied by accountants in preparing their financial statements. Look, it has lot. Principles, bases, conventions. Good example, cash basis, accrual basis. And rules and practices, sometimes going concern also you can consider into this. Right? Rules and practices applied by an entity in preparing and presenting financial statements. So it's very easy now, you can understand. It's kind of sort of rules and regulations that we apply, principles and bases. Then they are talking about changes accounting estimate, but they are not talking about what is estimate exactly. Basically, you can understand all estimates are like futuristic approaches. We predict something about future relating to our assets, liability, income, expenditure, and equity. So those are the things we call estimates, and changes means the deviation of those subsequently happen after the initial estimates. So these changes will happen usually as a result of new information, maybe new technological development, etc. Like I told you, if I buy a machine, if I buy a machine, probably based on its expected use, I'll decide the number of years to be used. But later, based on your maintenance policy on the machine, you can review and you can recheck. Somebody it will be changed in the future, right? Because of the maintenance policy you have. Let's say now, originally you planned good maintenance policy. Accordingly, you estimate it will be 10 years useful life. But later, what has happened? Your maintenance policy is very bad. As a result of that, what happens? Useful lifetime come down. Right? So therefore, you have to think on that. We will discuss later details. Then another term, material omissions or misstatements, or simply we can take it as an error. So basically, these kind of things will happen as a result of all these. Look, these kind of items are considered into that. Mathematical mistakes. Mistakes of applying accounting policies, it's also important. Let's say now, very good example like this. Let's say now FIFO is allowed, but LIFO method is not allowed for inventory valuation. Let's say mistakenly you increase or last 2 years on the LIFO method, which is not allowed by the standard. Then what is it? Is it change in accounting policy? Now you have to start from FIFO. You realize the mistake and you have started with FIFO now. Is it change in accounting policy or error? Look, now it's complicated, right? I told selection of inventory valuation method is one example for accounting policy. But now what's the story? That's why I said now memorizing stories are difficult. Now same story I am going to change like this. Last 2 years I valued my inventories based on LIFO method, but it is not allowed by the standard. Therefore I realize the mistake and I am going to value my inventories from FIFO from this year onwards. Is it an error or change in accounting policy? It's an error. Why? I have not complied with what? Standard requirements. So therefore it is an error. You have to account accordingly. We'll see how. Right, basically you can understand very, very simply in layman's language. You can understand like what is accounting policy. It's kind of conventions, rules and basis that is adopted by management or management to prepare and present financial statements. Estimate something relating to futuristic things, and accountants will make their own judgments to estimate figures or predict figures. And errors means something relating to mistakes or arithmetical problems, etc. And there are two terms. I'll come to these two terms later, but remember, standard discuss basically three things as I told you. What are those three things? Accounting estimates, errors, this is a summary of this actually, and accounting estimate changes, changes in accounting estimates, errors, and change in accounting policies. Only these three things. Very simple. Now already you know these three terms. No need to memorize technical definition, but you know these anyway now. Second point, only 2 points I need to tell you from the standard. But you see the time we spent to discuss this. Only 2 points, right? What are the 2 points? First thing is this. You should understand these three terms. That's enough. Second point, standard says all changes in accounting estimates should be adjusted prospectively. What is that? Prospectively means if there's any change of accounting estimate, that impact to financial statement should be adjusted from current year onwards. The term we use, what is it? Prospective application. Prospective means from current year onwards, very simply. Then obvious, this is prospective. Huh? This is prospective application. These two together. Errors and change in accounting policies should be adjusted. How they? Retrospectively. What is retrospective? Retrospectively. Retrospectively. Terms are there in the slides. You can see if you need. We can't write everything here. Retrospect. Now, theory is done already. Look, we spend only 10 minutes to discuss the theory. But what it says, the impact of change in accounting policy. Impact to what? Impact to financial statements. Should be adjusted from current year onwards. We call it prospective application. If you can remember, that thing already we have done. Where? Last week or 1 week before with IAS 16, I did something called change in accounting estimate. Can you remember one example? If I take, okay, I'll take examples later because examples are there. If I say like this, I buy an asset for 1,000 today, and estimate that the cost is 1,000, and estimate that the useful lifetime will be 5 years. Cost is 1,000, useful lifetime is 5 years. What is first year depreciation? 1,000 divided by 5, it's 200. At the end of the year, first year, you review your useful lifetime. You realize that no, it is not 5 years. There is balance 10 years. My estimate, last year estimate was wrong. As a result of that, already I have charged depreciation of how much? 200 for the last year. Now I realize, no, my estimate is wrong. My useful lifetime is, total will be 10 years of this asset. Already I have used how many years? 1 year. Then what is balance useful lifetime? 9 years. Then look, this is change in accounting estimate. The impact should be adjusted from that, not to the last year. Anyway, go 200. We have depreciated. We have charged depreciation. So therefore, what is balance depreciation for next 9 years? It will be first year 1,000 divided by 5. It means 200. Then draw it like this. Easy. If I draw it somewhere here, initially I estimate that it's 5 years, original cost is 1,000, right? Then 1,000 divided by 5 means here it's 200 depreciation. Then we take carrying value on date, this date, that's how we learn, if you have already learned. Then 800 divided by 9 will be depreciation for the next year. This year depreciation will be 800 divided by 9, it means it's around 89. Look what has happened as a result of change in estimate. Last year depreciation was 200. This year depreciation 89. Drastic change, decrease. So what do you feel? Is it correct now? Can you keep comparability now? Last year depreciation 200, this year 89. Why? You have changed your estimate. You balance useful lifetime. So is it fair to do so? The standard says if you do estimate, no need to go back and change your last financial statements. Keep it as it is. Go ahead with this. We call this, that means from this year onwards only we do an adjustment. We know last year estimate it was wrong, but still we don't do any change for the last year, and we go from the change year from onwards means prospective application. Hope with this you can understand what is prospective. No need to change your previous year's information, even though it is not, we can't say not accurate, but it is different, right? So that is what we call prospective application. Obviously, what is retrospective then? If you feel that something wrong few years or maybe last year, you have to go back and change those financial statements, or sometimes you have to adjust the total impact to the retained profit brought forward. I'll come to that point later. So then we call it retrospective. Then first thing you have to understand what is retrospective and what is prospective, right? So then theory says all change in account estimates only for prospectives, and errors and change in accounting policies out. Retrospective, right? So that's all about theory. That's a small point. This retrospective thing can be divided into two. One we call retrospective restatement, and other one we call retrospective application. The term retrospective adjustment, I don't know. Change in accounting errors or change in accounting policies So not change in accounting errors. Errors in accounting policy should be adjusted how? Retrospective. That retrospective method has two sub-methods. What are those sub-methods? One is retrospective application and other one is retrospective restatement. Remember, this point is very important for everybody. When you write an answer for this kind of, because last time also I thought to tell you, but I forget it actually. When you write, mostly I get some kind of informal feedback also from students. So therefore I know mostly people say this part is little difficult, right? But difficulty is measured in two ways. One, calculation difficulties. There are certain calculations. The other thing is learning point difficulties. Means every time I say these are the points you have to memorize. For any kind of answer, you have to understand what point should be selected. Appropriate theoretical point should be selected. That is your part. That means you have to ready and come for the exam. Understand? You have to memorize. Like, let's say now, if you are talking about this now, only 3 points. No, I told only classification of these three things, just to memorize ideas, and retrospective term and prospective term. Retrospective again 2 terms, application and restatement. That's it. That's all about theory, summary. You can ready and come for the exam on that. You can think what is it and produce relating to the relevant case. Then balance part is calculation. You have to support calculations. Then in any question you have 2 parts to score. One part is calculation part, the balance part is treatment part. Understand? So even calculation part is hard, you just write your answer with the theoretical aspect. You say, now this is the story, now this is the standard you need to refer, according to this you have to do like this, without any figures. Same thing you can write with figures. This is amount, you have to write like that. I'll show you today with one example. So therefore, anyway 50% you can score very easily, because you can ready and come for the exam. Balance what you can do, you have to read the story and you do calculation, because calculation things you can't memorize and come. But I feel now, mostly now MBA people, they don't like to do calculations. But it's part of analysis anyway. We should have that ability as well now. Even general MBA is same. They like to take kind of theoretical aspects. Technical subjects they don't like. But it's must now. If you're in the field, anyway, finance, accounting, it's part of actually very important thing in your life, right? I remember that point because I told you're going to do one small story here. I'll explain these 2 terms also. It's easy for me. Thereafter, I'll go to the question. What is retrospective application and what is retrospective restatement? By reading these 2 paragraphs, I am sure you can understand what is it. Just see. These are not my wordings. Huh? These are wordings of standards. I can't change these. Right? I have colored some items, I have eliminated some parts, etc. But same as it is from the standard. What is this? What is application? Are you using this in your, do you use this? No. In your practice? Have to know. Do you involve with financial accounts? Both. You are all rounder. Only one accountant? No. How many staff you have? Supporting the staff? 12. Ah, then good. That means you are managing 12 people. So that means you have to have vast knowledge. Otherwise, others will manage you. Right, anyway, let's see. I hope that do you practice these things in your companies? No. What is the nature of the business? Trading. What sort of trading? You are there, no? That you have to. Most people do not know. Right? So what you can do, if you do not practice, try to apply this with reasonable justification. So it's actually kind of value you have finally. At least, even though people do not like to implement these, you should suggest these. Like you said one story in your what is called something related to transform or something. So even though people do not accept, you should say them that according to this accounting guidance and standard, this should be like this. Even though if you like or dislike, this is a story. If you like, you implement. Otherwise, you just ignore. But you should say that I know this because of this. The course, I think, right? So that is knowledge, and you can show your talents as well. I think it's important. That's the only thing we can do. Otherwise, no point of learning like this, right? Right. Anyway, we'll come to this. Look, with this, what you can understand. Too hot now. One AC switch off. Why? So switch on it. Where's the AC remote? Who switch on this? 27 එළියෙත් මං හිතන්නේ 25ක් විතර තියෙන්නේ. අර වැස්සනේ. බැරි නම් ස්වීටර් එකක් ගන්නලා ඇඳගෙන ඉන්න පන්තියේ කිසි ප්‍රශ්නයක් නැහැ. අපි පා කියන්නේ නැහැ. Right now what you can understand with this? You didn't come regularly, I think. Did you come for the classes regularly? I can't remember. Yes. Right, what is retrospective application? Tell me. ඕක බැලුවට තේරෙන්නේ නැහැ. මම දන්නවා ෂුවර් එක තේරෙන්නේ නැහැ කියලා. Very simply, you can understand like this. Retrospective application means, I'll show you another slide, then you can understand it too. Yeah, look. Retrospective application means adjusting the total impact of this account in policy change or account in error to the for the reason most earliest for the most recent prior period retained profit. Let's say a very simple example, like this is my account in here. If you take any kind of financial statement in your assignment, I think you may have seen. Today is the assignment deadline, no? I forget. It's I think something around midnight, maybe. Today, yes, right? So hope that you have uploaded. Is it done? Oh, very good. No, done. Not done. Why? You keep it to the last minute. No, that's good. Right? No, no marks. So sometime will be negative marks if you get late. Done. Hello. Not uploaded. Why? You keep it hand. Just to check it still. What about you? But done, everybody. So we'll see. I'll give you results as soon as possible. Right? Yeah? No need. Huh? Sorry? No need. With statistics, I can guess whether you have done it properly. Very easy. But statistics should be matched with the qualitative things. Otherwise, it's very easy to see whether it is correct or wrong. No need to have financial state. If I have any doubt, so I can search it from the Google easily. If it is not private limited company, probably we can find it from the internet. So therefore, no need. If you need, you can upload it as a zip file. It's possible to the LMS. You can zip the file, Excel sheet and the annual report together and upload into the LMS. I think I have given 5 MB as I remember. If you need, I can expand it further. I gave 5 MB enough to upload the annual report as well as the other one. So therefore you can do. Word, it doesn't matter. I don't care about the Excel or for the easiness for me, I upload into Excel. When it's Word, it doesn't matter. It doesn't matter. Anyway, now you will have another assignment within next couple of weeks. Huh? That will be given by, not my one. So actually this is not an assignment. I feel like my one is the most easy one. Right? But you have to, the only intention, students should refer an annual report. That's the only intention, very clear objective, right? Otherwise, if you don't study, only thing, you can get it done from somebody else also, if you need. I don't have any restriction on that. But the thing is, you can't add any kind of knowledge. So that's why actually, there are people, this assignment purely given for non-accounting people. But they need to look at what is financial statement and what are the information available in that. That is the main understanding here. When you will use same set of data to do financial statement analysis for Professor Jayama's assignment, third assignment in accounting. So it will have kind of double advantage of that. Right? Now then in the case of retrospective application, what I told you, the total, now let's say some error happened somewhere here. An error happened somewhere here, let's say 2 years back. Then total impact should be adjusted to the retained profit brought forward. Why? As a result of this error, last few years profit may be overstated or understated. That total impact should be adjusted to the most earliest prior year. But it has a question. If you see your annual report, there is another column for comparative figures. Understand? So let's say I'll put like this. Let's say now here 2000, let's say 2012, 2013, 2000. No, this is not clear. I'll take another space I need. Yeah, I'll take this one. Let's assume this is year 2012, this is 13, this is 14, this is 15, and let's assume this is 16. Now we are in 2016. We discover in this year, we discover an error which happened, let's say somewhere here. Error is, let's say, depreciation undercasted by, let's say, 80,000. Erroneously, my depreciation of one asset, let's say whatever the asset, has been undercasted by depreciation undercasted by 80,000 in 2012, but it was discovered in 2016. Now what we have to do? Depreciation undercasted, erroneously, calculation error. The Excel sheet එක දාලා නේ හදන්න බක්කාට. ඒකට calculate කරලා වැරදිලා 80,000 අඩුවෙන් calculate වෙලා තියෙන්නේ. It's very easy work. Now how to rectify that error? It's as if only in that year. This is very simple story. So we will do more complicated stories later. How to adjust this? Very simple question now. In practice, how to do? 2000? Yes, exactly. That's what now. Not to retain profit as at this date. Why? In our financial statements, we show comparative figures. Understand? So if you take any kind of financial statement, there are two columns. This year and the last year. It's must. So therefore, my most recent retained profit brought forward should be which date? 2015 beginning or 2014 end. So therefore, this 80,000 should be reversed or adjusted to retained profit brought forward. Retained profit brought forward on which date? 2014 end. Why? We will show you this year as well as this year financial statements in our 2016 financial statement set. That's the meaning of most earliest prior year. Most possible or the most possible recent year retained profit brought forward should be adjusted with the total impact of this particular error. Understand what I said? Still we have not practiced, just a concept, right? With statistics you can see later how to do this. Then what is it? We call it retrospective application. What is retrospective restatement? If something happened like this, you have to go back and reissue what? This year's financial statement. Is it easy? It's not easy work. Right? It's quite really difficult work. Why? Already we have printed and distributed. We have to redo the same. That is what we call retrospective restatement. Retrospective restatement. Understand? Then I told you mainly how many points? 3 points. What are those 3 points? First thing, we are discussing 3 things. Accounting estimates, change in accounting policies and errors. Second point, I told you, then you have to understand those 3 terms. Understand only. Still I didn't say examples for these. I'll tell you examples with cases later. That's why I didn't say examples. Second point, change in impact of financial impact of change in accounting estimates to financial statements should be adjusted how? Current year onwards. We call it prospective application. Next point I told, impact of errors or impact of change in accounting policy should be adjusted how? Retrospectively. In retrospective adjustment, there are 2 methods. What are those? Retrospective application and retrospective restatement. What is retrospective application? Take and adjust it to most earliest retained profit brought forward. අපි කියනවා රඳවාගත් ලාභය. Retained profit means, you know, undistributed profit. Already we have discussed with changes in equity statement, right? I told now everything interrelated. Now if you can't remember what is retained profit brought forward and where is it, now question how to show it. If you can't remember what is statement of owner's equity roughly, now you can't work out with this, right? Retrospective restatement means, what is that? You go back and reissue or rechange your financial statements, previous financial statements. Then no error has been happened. Why? Everything will be reissued. Is it possible? It's really difficult work. But if you can remember one more thing you have learned with Professor Jayamaha. I told no, those lessons also important, I told every time. The principle is consistency. What is it? I'm going to take the fourth point in the lesson. What is consistency? I can make a statement. There are students, they do not have consistency of attendance in lectures. What is that? Then you can understand what is the term consistency. That's why I said. What is consistency? Yes. How do we apply it in accounting? Consistency means? It's not my scope, that's maybe 10 weeks back with Professor Jayamaha. What is consistency? I'll use a term, otherwise I say usually Mrs. Accountant, right? Or something, right? Yes? You said something, yes. Yes, exactly, yes, right. So it means methods or techniques or rules and regulations that you use in preparation and present in financial statements should be used continuously without changing. You change, what happens? You change, let's say now, this year we see it at 10%, next year it's 5%, thereafter 12%. This year straight line, next year reduce imbalance, and next year unit of measurement or something like. You change here, then what happens? What is losing as a result of changing all these methods? One qualitative characteristic, again look, previous work. What is the qualitative characteristic we miss? Oh, we are losing. If you are violating or if you don't keep the consistency of methods that you use in accounting, what accounting concept? Yes, exactly. That is about comparability. Good. Comparability. Why? Can you compare information? This year you depreciate at 10%, next year at 12%, next year at 13%, again 20%, again 5%. Oh, it is deviating. It means you can't keep comparability in financial statements. Therefore, what happens? Standard says, I am coming to another point here. Now, this is a point I need to explain actually. Standard says we should try to keep consistency of applying accounting policies. But the two occasions where you can change or you can violate this consistency principle. Actually, that was a question this time A-level. Last month, no? It was a A-level question. They asked, what are the two occasions where you can change accounting policies? ගිණුම් කරන ප්‍රතිපත්ති වෙනස් කළ හැකි අවස්ථා දෙකක් සඳහන් කරන්න. Mostly students didn't provide correct answer, as we know. What are those? Look, it is here. If it is required by standards, if it's a requirement of any accounting standard, you have to change, even though you are sticking with any accounting method, as a result of accounting standard requirement. Second point, based on management judgment, if you can feel that, if you can justify that, it is essential to do the change to make a better presentation about your financial performance and financial position and cash flows, then you are allowed to change accounting policies. Understand? So what are the two occasions then? One is based on standard requirement. The second point is, simply you can say to make a better presentation about financial position, performance and cash flows. Understand? So that is the second point. Look, results of the financial statement providing reliable and more relevant information about effects of transaction or the events or conditions of the entity's financial position, performance and cash flow. It means if you can justify that as a result of this change, you can make a better presentation about your financial position, performance and cash flows, then you are allowed to change your accounting policies. Understand? Hope that is it is enough for theories. Otherwise people will fall asleep. No. So therefore we will straight away go to the cases. Right, then only I told only few points now, remember, right? This is more than enough. Now you have to use your professional skepticism. What is that? Usually as accountants, I every time say you should have 6 senses. I told once, no. Usually how many senses you have? 5. But you have to have 6 senses if you do accounting and finance something. If you do accounting and finance related work, or accounting finance related course, or maybe kind of related job something, you should have 6 senses. What are those? What are the 5 senses you have? Right? Yeah. No, not common sense. 6th one is not common sense, right? Most people say it's common sense, not common sense. What is it? 6th sense you have to have. I mean, mostly people do not have. What's that? That's what I told you previously. That is what we call professional skepticism. That means based on your experience, knowledge and everything that you have in your field, I don't know what is your field, you should be able to apply something. There is no theory, there is no hard and fast rule, but you can do something. That's what we call professional skepticism. That means based on your experience and everything, knowledge, everything, you should be able to do something by thinking. That means that is sum of all 5 senses, maybe. Right? So you should be able to have that ability. Most people do not have. We'll see whether we have it today. I have some cases to see, to test whether we have it. Now, see, what are the knowledge points we got today from this? Three things: retrospective and prospective. Under that 2 points, retrospective 2 things. Retrospective application, that is to retain profit. That's how you can remember. Retrospective application means adjustment to the retained profit brought forward. Very simple. That's more than enough. I don't ask to define it. Then retrospective restatement means issuing or the reissuing financial statements. It's quite difficult. The next point I added, we have to keep consistency of applying accounting policies, but there are 2 occasions where I can change these accounting policies. But remember, if you change your accounting policies based on management intentions, like management wants to change any accounting policy, if so, you have to adjust everything under account retrospective restatement. It is must. If management think that you need to change an accounting policy to make a better presentation, that impact should be accounted how? Based on retrospective restatement. It means indirectly what standard says. Standard discourage management to change what? Accounting policies. Why? Retrospective restatement is easy. No, it's difficult. So therefore, this standard discourage management to change their accounting policies they select. So look, it's kind of a good thing. That was not there previous. It was added after 2012 as I remember. That's a good point. That means management can't change accounting policies based on their choices. Even FIFO WAC, it's not allowed to change. If they change, what it should be? That should be retrospective restatement application. It's must. If it is a requirement of a standard, no problem. You can go either restatement or application. Mostly people what they do, they will do. They go with retrospective application. Why? It's easier than the other one. But in the classroom also, we do only what? Retrospective application. Why? Restatement can't test. That's the reason, right? So therefore, the examination purpose, we have to learn only one. The other one I can't check. How can I check? Then I have to give previous year's financial statement and ask you to change everything. So it's not possible, right? Right, let's see this case. What do you think about this story? Yeah, it's that. Now, already we have covered everything about theories. The problem here is to decide whether it is change in accounting policy or change in accounting estimate. That is difficult, right? So if I tell some examples, look this one first. Do you have answers there? Next slide. No. Without. නැත්තම් ඔක බලන්න ඉන්නේ. මේක කියවන්න කලින් නැත්තම් කියවන්නේ answer එක, I am sure, right? Usually I don't upload the answers. Look, H owns an office building which it uses for its own administrative purpose. Accordingly, the building is classified as property, plant and equipment. It's very clear, right? Because it is used for administration purpose. Last week we learned. And carried at depreciated historical cost. That means, what is the method? Cost model they are running, right? During the current year, management moved the workforce to a new building and leased the old building to a third party. What has happened? They have a new one. And accordingly, they have moved to a new building and the old is out. Understand? So accordingly, actually if you do not use any asset for your administration purpose or something, and if you fully leased out, especially lands and buildings, we call it investment property, LKS 40. No need to remember the name. Anyway, that's different classification. If you are not familiar with accounting, you can understand. If you are not using it for administration purpose, the classification should not be PPE, something else. Right? We call it investment property because we use this property to earn kind of rental income. Then it will come under different category called investment property, which is coming under LKS 40. H had not previously earned any rental income of any properties. That is first time, right? They have done it. Management has questioned whether the comparative amounts, comparatives, because we have to show comparatives now. Amounts on all buildings should be restated to fair value to aid comparability with the prior period. Now, the problem here. Now, there are 2 years, right? There are 2 years. Then, let's say first year and second year. Comparative year means first year. Now, we are in the second year, assume so. Last year, same building we used for administration purpose. As a result of that, we have what? Depreciation. Not this year. Let me see. Last year, right? Last year. This year, from the same property, we earn what? Rent income comes under other income. Now, The question asks whether it is change in accounting policy. If it is change in accounting policy, what you have to do? You have to restate your comparative asset. Now, last year on the same property, last year depreciation, this year income. But last year expense, this year income. What you have to do? Is it change in accounting policy first? Or change in account estimate or something? What is this? That's a story. I told you, if you decide what is this, thereafter work will be very easy. Every time the decision is the most crucial part. Last time also we didn't know. After deciding whether it is cost or something else, whether it is tangible or intangible, work will be carried out by clerks. How to take the decision, that's the thing. What's it? It's estimate change. Or estimate, account estimate. It's estimate change. Therefore you have to adjust something, no? Prospective. How do you do prospective application adjustment? We recognize last year income, no, this year income and last year depreciation. Keep it as it is. Anybody? Prospectively. I didn't get it. Okay. No need to change. Okay. Just estimate. Buddhika, no? Yes. Estimate change. It is neither estimate to accounting policy. Answer. Look, it is not coming under accounting policy or estimate. Not related to both. Why? It's just changing the usage. You change in the usage. Look, that's the way. Right? I didn't consider that kind of story, no, in my theory. Change in the purpose of use is not accounting policy or estimate. Is it estimate or policy? That's why I said you have to have professional judgment. It's quite difficult. To be something estimate change, that should be forecast something about future. Is something there? No. To change something, to consider something as change in accounting policy, there should be change in methods, rules, conventions, etc. Is something there? No. Only change in the work purpose. It is not either what is called change in accounting policy or estimate. Therefore, what you have to do, you don't want to do anything here. Keep our part, right? You said you don't want to do anything now. Keep it as it is. You also said the same. No need to do any changes. Go ahead like this. But the justification is wrong. Why? You said it is because change. You also said the same. Because change in accounting estimate. No, it's not so. That's the reason, right? This is anyway not change in accounting policy or either change in accounting estimate. It's only change the purpose of the usage of the asset. So then purpose change means, so it is not a matter. So you go ahead with this. So that's the answer. That's why I said difficulty of selecting these, right? I'll take another one. Look, no restatement of the comparative amount should be made. Answer also same, right? Look, some examples. I'll tell some examples also. Estimate changes, account examples, bad debts, inventory obsolescence, fair value of financial. I think you don't know that. Warranty obligations. I'll come to that point later. There are some examples you can take later. There's a question. What's this? What is this? Should management adjust the carrying amount of an anyway, that's the question. Management purchase money counting machine on 1st January 20X1 4,000. Just forget about the values. Assess useful lifetime was originally estimated to be 10 years. Management reviewed the useful lifetime on 20X3 and conclude that asset had a remaining useful life at that date of 10 years, altogether 12 years. What is this? Very straightforward. It is change in accounting what? Estimate. Very straightforward, no? Right. No need to spend more time on that. Look this. No, I'll come to this point later, not this. Look this. Remember, I told one point now, change in the purpose is not change in accounting policy or estimate, therefore no need to do any adjustment or disclose. Now again, what's happening here? They are changing the purpose of use. What is this? Is it estimate change or policy change? No, neither estimate or policy change. That's very straightforward. But still, then what you have to do? Do you need to, then what is the question there? Should now read the question. Should management disclose the change in classification? Should management disclose this story in their financial statements or not? That is the question. First you have to tell me whether you need to disclose this, even though it is change in accounting policy, even though it is not change in accounting policy or accounting estimate. That is your decision. You should disclose. Everybody? People who are online? Do you need to disclose this or not in financial statements? Everybody say yeah. Why? Yeah, now all say, but in the previous story, previous means one before the last, right? We didn't disclose it. It is, I said it is not change in account estimate or policy, and we didn't disclose. We just went like that. We took rent income and depreciation, no problem. Now why do you need to disclose? You say, everybody say now disclose. Why do you say disclose? I will tell my argument later. But you say now it's important to disclose. Why? Previous one also same. Previous one also same. Then we will change quantities, yes?
Depreciation of the PPE.
Yeah.
Should cost of the acquisition.
Okay, fine. Therefore, you need to disclose. Okay. Fine. No, it's cost of sales to administration. What has happened? Still, I am not sure whether you have understood the story. Last year, one machine or something, I said no, it's PP, one PP, property, plant and equipment they use for industrial purpose, that means manufacturing something. Accordingly, they will recognize that part of manufacturing cost. As a result of that, it straight away come to cost of sales. But this year, they have changed the purpose of use, that is to administration purpose. Therefore, they have charged it to administration expense, depreciation. They have changed the purpose. Accordingly, last year, this data under cost of sales. This year, this data under depreciation, administration expense. In the previous example, I told you, last year it was under other income, this year under expense. But still, we didn't say that we need to disclose. Management decided to change. Therefore, it is must. For the purpose of to hide manufacturing costs, they have done something like this, is it? You say, just kind of answers, no, usually. Yeah, possible anyway. It's possible. Right? Yes, that's true. You said something. One word you said. Why? Is it material? It's a very small amount. Is it material? Tell me this 1200 is material or not first. Anybody from online? Why they are silent today? Do you think that this 1200 depreciation is material or not? It's part of auditing, you will learn next semester. What do you think? Material. Lakkamak material then නැද්ද කියන්න මේ මාමාරුවක්ද? You can say no. Material. Why? You mean like turnover 200,000, expense is 1,200, it is material. Yes. කාන්තාවන්ට සාමාන්‍යක material වෙන්න පුළුවන් නැද්ද? සත පහක්වත් අතාරින්න නැති නිසා maybe. But anyway, still it is material, but reason is not that. Still, that's why I said you just see your professional skepticism. There is something big story inside this, even though you can't see. Both years expense, there must problem. No problem, no. No problem, yeah, that's why I said no problem. Still, there is big issue here. You can't see. There is something behind this. Still you can't see. That's why I said you have to have kind of sixth sense is not there. Everything you have, knowledge and everything, but something missing. See, statistics. That is part of forensic actually. Yes, point. Exactly, that's the point. Look, this is material. Why? If you look this 1200, if you classify as cost of sales in this year, what will happen? What will happen? It will become gross loss of how much? 200. Usually businesses do not have gross loss. Net loss possible. Gross loss means at least they have big question on their gross. They can't run the business if you have gross loss. It means at least you can't cover the direct expense. So that means no business there at all. So therefore, look, sometimes like you said previously, intentionally they have classified the purpose of this one to hide this gross loss. Therefore, this even though small gross profit concept is two different concepts from gross loss, which cannot be. So therefore, this is material. Now look in the story, even though this is not accounting policy change, or even though it is not change in account estimate, we should disclose this fact. Why? It is important to, that's the point you said, material. This is material story. What's the story? If you take this 1200 into cost of sales, your gross profit becomes gross loss. It is material. So therefore, your answer should be, you have to disclose this fact. What's the fact you have disclosed? You have to say that depreciation is this much and it has been reclassified this year from industrial purpose to Administration purpose. You classify this as cost of sales, your gross profit will become gross loss of 200. That point should be disclosed. Why it is important? Understand? Since it is affecting to going concern finally. That's why I said you have to think about this little. Right? So otherwise, any idea? You have, yes, this undertaking should disclose change in classification. In this change in classification, look, it's not accounting policy or something. The undertaking has reported gross profit as a result of the reclassification other than gross loss. The presentation of gross profit, even small one, rather than gross loss might alter the user's perception. Look, it's true, right? Even though small gross loss, people will have a doubt whether they can have sustainability. So therefore, it will have an effect to the business performance. You have to disclose it. And we'll go for some calculation aspects. Look, example number 4. The company purchased a machine for 110,000 on 1st October 2011. Its useful lifetime was estimated as 5 years and residual value is 10,000. Those are straightforward ones. On 1st October 2010, you have to be careful with dates here. 1st October 2010 is middle of the year. Why? Our accounting year end is 31st March. It has been recognized on 1st October 2011, 20,000 worth of accessories were fixed to the machine. That was improve the long-term efficiency of the machine. Therefore, what you have to do? Should be added to the cost of the asset. We did in LK 16. You cannot write off this as an expense. You should add it to asset value, but you have written off it as an expense in 2011-12 year. Now, it has been discovered in which year? Assume that this has been discovered in the year of 2014-15. Now what you have to do? First point, that's why I said now I told you, any kind of question you have 2 points, 2 parts to get score. First part, you can be ready at home and come for the exam with the points that we discussed from each standard and say what is a reference point to this story. What's the point? Without having any calculation. Anybody can do that. It should be. Otherwise, no point of learning accounting. What's the point you have to refer now? Yes. Before that, you have to say, that's the third point. Before that, what you have to say? What is this first? What is this? It is an accounting error. You should be able to understand that first. If you need further, you can explain. Therefore, you have to apply what? LKS number 8. If you need, that's not essential. Non-accounting people, they can't. I don't encourage people to remember all these numbers. So, but anyway, you should say this is from errors. If you say errors, obviously you can say it's from LKS number 8. 1 mark, right? If I give, let's say 6-7 marks for this, 6 marks, 1 mark for that point. Second point. Since it is an error, you have to adjust it how? All are the things you can score retrospectively. Accordingly, there are 2 methods of retrospective adjustment: retrospective restatement and retrospective application. Here you can apply what? Retrospective application, because data is not available for others. That's also possible. Then already you have earned 2 marks. Balance 4 for what? Let's say 4 or 5, I don't know, right? It depends. Balance part for calculation, but still it is not important. You can score another 1 mark. How? Maybe 0.5. You can say, according to retrospective application, what you have to do? This is the answer, original answer I say, right? Retrospective application. the impact of this error to, you can say the quantitative impact, the financial statement impact of this error should be adjusted to most recent retained profit brought forward, that is retained profit brought forward as at which date? Now we are at the end of 15 March 31st. This year will be started by 1st April 14. Comparative year will be next. Therefore it will be 13 March 31st. Look at the timeline. Now we are here. We are here. This is my year. I show comparatives for this year. This is comparative year. Comparatives. So therefore, what is most earliest retained profit brought forward? Will be 31st March 13, or you can say 1st April 13. Another point. Still look, we didn't touch calculations. Further, if you need to have another mark, you can say what is the amount. It should be 14, I'll show you later. Understand? So that's it. Balance with the calculations. Then you should understand how to do this. Still I didn't teach, but you'll see how to do that. By looking at answer even you can understand how it happens. Right? Now I have given 2 years. This is comparative year. This is current year. What is the total impact of this? What has happened now here? On this date, we have recognized something 20. 20 as an expense. Right? Now, to this point, how many years back? How many years back? 1st October 2011 to 1st April 2013. How many years? 1.5 years, or 1.5 years. Then what is the total impact of 1.5 years? What we did? We recognized 20 as expense in this year. As a result of that, we didn't provide depreciation on this 20. We didn't provide depreciation. What is underestimation of depreciation over last 1.5 years? 20 divided by, what is useful lifetime? 5 years. 20 divided by 5 into 1.5. 1.5 years. It is how much? 6. Right? 6. Not only that. Now we didn't provide depreciation of 6 for last now assume that I am standing on this date, right? For last 1.5 years. Or as a result of that, what happened? My profit overestimated. I didn't provide depreciation. I didn't consider expense. Means my profit goes up. On the other hand, this 20 I recognize as an expense unnecessarily, erroneously. Therefore, my profit went down by 20. What is the net impact now? 14. Look. Total impact to profit as a result of this error is how much? 14. Got it? Right? It should be on this date. I expect this 14 as part of answer in this class. If I do this for undergraduates, final year, I expect balance part also. What is it? How to restate these figures with double entries? I told you I don't want to have double entries. Right? At least you should say, now that thereafter clerical work, the clerks will do that. Right? But we don't show that. We can't say. But anyway, how to restate it with double entries? Because there are non-accounting people, no, I will say the answer, but I don't expect like that. How to say? How to restate? Once my 20 should be added to asset value. Therefore, asset account debit 20, retain profit credit 20. On the other hand, I have not provided depreciation. Therefore, 30 minutes. Depreciation how much? 6. We have not provided depreciation, now we have to provide. Accumulated depreciation credit 6, retained profit debit 6, then retained profit credit 20, debit 6, net is 40. Understand? If you need, you can write it by one entry. Now, asset account debit 20, retained profit credit 14, made a mistake. Retained profit, no, made a mistake. Retained profit credit 4 and accumulated depreciation credit 6. In one entry you can say 20 debit to asset, accumulated depreciation credit 6 and retained earnings credit 14. That's for this 14. Already we have done the work. Now since we show comparatives, this year you have to charge depreciation as usual. Now total impact, you have reversed retained profit brought forward here. So now how do I incorporate this thing into this year? What is depreciation for that year? 4. Why? Already you have charged balance 20. Look. This 4 should be charged as why 4? For that year, already you have provided depreciation for the 20. Sorry. For the 20 you have not provided. Therefore that 20 divided by 5, this year depreciation. For the current year, now we are discussing here, current year means this year. We have not done anything. Then as what we can do? Provide depreciation on how much? How do we get 24? What is cost of the asset? It's 110. 110 plus 20, 130 minus 10. Minus 10 divide by what? 5. What is minus 10? That is residual value. Cost minus residual value divided by useful lifetime. 110 is the cost. We added, already we have added, now 130. Minus 10, 120 divided by 5, it's 24. Look now, for the current year, no impact at all as a result of this error. That is our purpose. That's why we said, means when it comes to current, there should not be any impact as a result of this error. Understand? That's our retrospective means previous year's profit. So finally, when it comes to statement of financial position, look here. My cost now not 110. What is it? 130. Why I added now 20? 130 minus total accumulated depreciation. Now we are in this point here. Sorry, here on this balance sheet. How many years depreciation? 130 minus 10 residual value plus, divide by 5 into how many years? 2.5 years. 2.5 years means, it's there I think, calculation, yeah, 130 minus 130 means 110 plus that 20. Added 20. 130 minus 5 divided by 5, 2.5 means 60. 60 plus this year depreciation, 24 will be total accumulated depreciation when it comes this year. Those workings are there. Which 60? No need, already it is there. No need to do any adjustment for 60. Why? Accumulated depreciation, if I draw the account, accumulated depreciation, for first 1.5 years, how much of accumulated depreciation we have? On 120. That is there now already. On 120 already we have provided depreciation. We reverse the under provision 6. The 100, what they have done, 120 minus 10 divided by, no, 110 minus 10 divided by 5 into 1.5. 30, and this year depreciation 20, and this 4, 24. Altogether 60. It is there, therefore no need to do any adjustment. Understand? That's how we need to do adjustments for errors. Right? Right, let's have a small break and I will start by 15 minutes. I feel like you are tired than me, so therefore I'll give a break, right? We'll have break for 15 minutes and let's start by 3 o'clock.